Good afternoon, YouTube. Good afternoon, pre-market prep family. Here we are on a Wednesday. It is Options Unchained with CC Lagator. CC, how is your week going? How's your day going?
Good, Brent, my man. Look at us. It's been crazy. Like we keep saying every time we do this show on Wednesday, we're like, it's been a crazy week, but nothing beats this as far as craziness goes.
Yes, we are unfortunately in a major conflict. I think it's safe to say it is a war in the Middle East. S&P 500 futures, little quick rundown here. S&P 500 futures trading up 0.9%. I know you like to track this, the SPX. That's right there too. Crude oil trading up almost 0.5% here today. Felt like we were getting a little bit of relief on the oil front, but here again, we are trading up about 30 cents per barrel in oil. We have tech leading today, getting a little bit of relief after semis were under pressure the last day or two. Financials higher, energy and staples were kind of like your worst performers. We were watching the VIX yesterday. I see a spike in the VIX to 28.15. We've calmed down just a bit here. We're closer to 20. How are you thinking about the VIX here today? As you know, we have major conflict happening. Market seems like it's cooling down, but we have, you know, some very big questions that need to be answered in the market over the next month or so here.
Yeah, I think it's the SPX move today, the follow through, and the VIX spike yesterday. It's kind of well, first of all, let's start with the SPX. We are exactly where we were before the Iran stuff. So we are exactly back where at Friday's close. I think it was 68.82 or something, right?
Good perspective there.
So the stock market is essentially acting like nothing happened and sort of ignoring the fact that anything's still happening, which is kind of wild. And you brought up oil. I think that one's particularly interesting today because over the last couple of days, the market was reacting almost 100% correlated, not as far as like the reaction and the percentage move it was moving, but just every intraday headline, every overnight gap was dependent on which way oil was moving for that hour, right? Mm-hmm. And oil has been kind of leading us the last couple of sessions. Today is interesting because oil is actually higher. It's not that far off the highs from yesterday. I mean, I think I hit like 77 or whatever. Now we're around 75. And yet the market followed through.
We're back to moving in unison a little bit.
So now they're starting to separate a little bit.
Yeah.
Now, psychologically, this is probably an important level because we're back to Friday's close, and so that's sort of a reminder sometimes. Like, wait, really? Like nothing's going on in the market. So that this may be like an inflection point psychologically. Like, are we ready to rip this back to highs? Really? Like until we know more about what's going on.
Seems unlikely.
Seems unlikely. Okay. The VIX spike is sort of fascinating because typically, you and I were talking right before we went live, typically, if you saw an equity sell-off and you saw a VIX spike to 28 and then back to 20, that typically is the capitulation, right?
Yeah.
What makes this one slightly different is typically you'd see a VIX go to 28, at the end of like a 5+% pullback in the SPX, right? We are only the dog. We are only like, I mean, we're unchanged since the Iran, stuff officially started over the weekend.
Mm-hmm.
And we're only like what? I mean, how far are we from the highs? 2%, not even 1.5%.
Yeah, not even. Yeah.
Yep. So, I mean, look at this range. This is a 3-month chart. So yeah, we're less than 2%, a little bit more than 1.5% off the highs, right? So to have a VIX spike to 28 during something like that,
during a war,
Yeah, it isn't the traditional way. Like, had we been selling off and we went down 5% and like we hit like a level like, 6,500 or 60 or 6,600 in the SPX, and we whipped back up and the VIX printed, up near 30. The way that typically would work is you've already declined so much in the SPX that you get this like whipsaw. Yesterday would have been a green day by the end of the day, had those kind of like normal situations.
Yeah.
And a normal capitulation happened. We didn't do that. What we did was we, made up half the 2+ % move we were down in the morning, closed like around, down 1%. And now today we're following through and we're doing that secondary move. And the VIX is back down to 20. I don't like the VIX at 20 here. I would say,
Yeah.
so like be very cautious of this move right here, because I think we're just still too dependent on the tape and the news. This could be traders are so conditioned to buy the dip, right? So it could be partly that. It could be an expectation that we will, over the next couple of days, see some sort of, ramping down of the war.
The aggression or whatever. Yeah.
I don't know about that one. But that could be why we're seeing this behavior and why we're seeing that bounce.
Okay, so I think you're giving us, from what you're saying, I want to try to put it a little different way and get your thoughts on something that I just noticed, and also give us a little bit more of an update of what's going on here. So you're kind of giving us a warning that the moves in the VIX are probably going to be pretty dramatic. We just cooled off from 28 all the way down to 20. You're a little concerned by that behavior. And something that I just said to you, and I just said in the STN room, is we had a few notable headlines over just the last hour, in my opinion. We had a headline out of Iran saying Iran is beginning to shift toward governing for a prolonged war.
Right.
That's from inside of Iran. We also just had Vladimir Putin speaking separately here and saying that there was an attack on a Russian liquefied natural gas tanker. He saw that as a terrorist attack, and he said maybe it makes sense for Russia to leave Europe now to more reliable partners. In other words, getting oil and gas from Russia. Right. I would think that would be a very important headline for oil. Mm-hmm. However, there was really no price action in oil. There was a little spike in volume in oil. So, again, the kind of setup here is we're expecting more dramatic moves. At the same time, to me, it kind of feels like the market is already becoming a little muted to these headlines, and we're just 5 days into this conflict.
Yeah, exactly. As we are conditioned to do. I mean, historically, geopolitical events aren't, sort of long-term market moving. They tend to be very short-term, right?
True. Yeah.
What's happening with everything in markets, right, over the last couple of years is retail investors have become more sophisticated. It's more computerized. You have bots trading instead of humans with emotion. Is everyone sort of tries to jump ahead of those moments, right? So that buy the dip, I was writing something on Sunday and I was like, everybody knows that geopolitical events tend to not like hammer the market longer term.
Yeah.
So that means when everyone knows that means, and I think I said as soon as Monday, we might get the buy the dip. And that's exactly what we got. Like, I don't even think it took 10 minutes into the open on Monday before everybody stepped in to buy.
Yeah.
The flip side of that is exactly what you're just talking about. It's Wednesday. This started when? Saturday?
Yeah.
I mean, I think it's a little too soon to start ignoring headlines. Right?
That's what I think. Yeah.
Yeah. So we might be seeing the flip side of that sophisticated investor and sophisticated bots and sophisticated, starting to maybe become overly complacent too quickly. And go to my screen real quick. I want to just show you one thing. Well, first of all, I'm on USO just to show you like oil. The volatility in things like oil and gold and all are massively elevated still. while the VIX is contracting back down to 20. So the things that had been spooking the market are still kind of around. Like, the USO, I'm looking at USO options. It's like a 10% expected move over the next couple of days, which makes sense. Gold is the same way. The volatility in treasuries has picked up. Bitcoin volatility, Bitcoin's starting to make a move. So you're seeing all this, these other assets move around a lot. I wanted to show you something though, the VIX. So I just happened upon looking at this. So you should never technically chart the VIX, but look at this year. This is December. So this makes sense. Volatility sells off into the holiday at the end of the year, and then it starts creeping higher or whatever. But look how elegant that trend line is at the
orderly
bottom. It's kind of wild. And then we see this spike. And this is a 1-year chart, just so everybody kind of gets some perspective. So we saw a little bit of, that volatility in November, the volatility in October, and those SPX moves were larger, right? Than what we just saw, 2.5% or whatever it was. But they tend to come in pairs, right? So you get a spike in the VIX up towards 30, it tends to come in pairs. If you go back to, obviously this tariff tantrum, we had a couple of spikes very similar, one in December, one in early March, and then the big one, right, in with the tariff tantrum.
April. Yeah.
So what I would say is I don't expect this VIX to just suddenly go back to normal. Even I don't even see it hitting 18 or anything anytime soon. So we're probably near the bottom of how low volatility can compress.
Yeah.
And then what that means is you have an environment where if we go back down and we test those lows from, when was that, yesterday morning, you are going to get a massive spike in the VIX that probably takes it back up to 28, right? And especially if we go below that level, which was 67.10 in the cash, right? Then you're going to see a massive spike in the VIX, and it's probably going to come alongside some headlines, some negative headlines, right?
Yeah.
Should things start to turn on that news front,
more optimistic?
Exactly. Which is, we're all rooting for that.
Yeah.
If we were to see some evidence of that, maybe, it's funny you brought up the headlines from Iran. Everybody's a Iranian expert right now, but what that read to me is the Revolutionary Guard, I believe, is pretty much in control right now.
I think, yeah.
And looking for that kind of going back to the Venezuela thing, the move basically, and the reason why that's been fairly quiet since then, is the secondary people in command took over, and I think we kind of bought them off, right? So the question is, does the same thing happen in Iran, or is the Revolutionary Guard, who are real true believers, these are these are the most hardcore parts of that whole system of military and government, can they be bought off, right? Because that's sort of the way out of here. And so if they're not, and they're digging in their heels, it's going to be a very different, prolonged, protracted thing, which will, we're going to wake up every morning to oil volatility and things, Yeah.
I heard, I can't remember. It might have been Mark Chaikin earlier this morning. I can't remember where I heard this from. Sorry if it wasn't Mark, but I heard that maybe the Revolutionary Guard put Khomeini's son in charge.
Okay.
Which I haven't heard any confirmation of that, but I mean, it would make sense. And to your point, it would be, I think it would be very unlikely that that would be the case, that somebody like that could be potentially bought off, right?
Yeah. And that's an interesting scenario where, the most volatile thing that can happen right now, and the worst thing, on a human scale and all, is this turns into a civil war over there, right? And
Well, I mean, that's what we've been hearing over the last day is that, the US is arming Kurdish forces, arming rebels in Iran to try to they're trying Israel's trying to uh occupy the time of the Iranian police guard so that they
yeah,
can make room for rebels to come in.
yeah, that is, I don't know. How old are you, Brent?
41.
All right. So, yeah, like I'm old enough to remember the 2000s, right?
Yeah.
And it's like, yeah, that's not great.
For sure. For
Yeah.
sure. Yeah.
So the best thing for sort of, you know, people, not people long term, because it does suck that like you have that kind of regime running a country like that.
Yeah.
But for stability and getting back to markets and like that, the best thing for markets would be sort of like a seamless transition of power
Certainly.
and sort of like a, hey, we can do that anytime we want, but we're going to stop for now.
Yeah.
That then markets rally and oil goes back down and everything like that.
Mhm.
But again, everybody's an expert on Iran right now, and nobody's really an expert. So
Right.
nobody knows what's going to happen next. But what I would say is that kind of volatility hanging over, I don't trust a VIX at 20. It's too
Yeah,
low. It's
for
too
sure.
low compared. And to your point about like the market already shrugging off some of these headlines,
Suspect. I think.
suspect.
Yeah,
It's too
for
much.
sure.
It's too far too fast. And
Yeah.
and you can see it on that VIX chart. Is like, we're already back to that, kind of like trend line or whatever. Or we're not already back, but like we're pretty damn close. So I would expect some, kind of increase in volatility from 20 at some point over the next couple of days. I don't know what exactly causes it, but we are now unchanged in the SPX since this began. And you can see it, like, look at it. Like there's no reason for the market to have stopped right here. This is today's chart.
Yeah.
There's really no reason for it to do that except for people backed up their charts a week and they're like, oh my God, that we're
Yeah.
right back to, Friday's close, which was right here. Right.
Which
Yeah.
is, it seems crazy to me, but this is what we have in front of us. We got to look
Yeah.
at what the market's showing us, and this is what it's showing us. So
Yeah. So let's back out of sort of the geopolitical aspect of all of this.
okay.
And let's talk about the thing you and I talked about last week, which was the orange card and the correlation. So this is
Yeah.
a repeat. This is exactly what we showed last week. And we were talking about the dispersion within the market, which has basically lasted the last couple of months. And I've never seen anything quite like it, where you were having so much volatility under the surface, sector by sector and everything. And yet it was producing like a very stable consolidation in the SPX. Having that kind of dispersion during a earnings cycle is not uncommon, right? So
Yeah.
picture the market's moving around into year end, into December. Then all of a sudden, you start hitting, and then into January and everything. And then you start hitting earnings season in earnest in February, late Jan and early Feb. Sectors start moving around, individual stocks start moving around. It makes sense that dispersion numbers would be very high. It was like basically that, like with gasoline thrown on it, because of the AI story, because of what energy names were doing into a
Yeah.
possible,
Totally.
Iranian situation.
Mm-hmm.
So now, tonight, we get Broadcom earnings. That is really kind of the last sector mover that is, like in this earnings season. There'll be more earnings and everything like that, but like it's sort of like the last big one. It's the last Mag 7 Plus, right?
Yep.
And we are already seeing signs. There's nothing to sort of unify stock moves like a war, like we've seen over the last couple of days. So everything except for energy has basically been moving in unison, right? If you look at like a sector heat map every day, it's pretty much everything moving in unison. Energy is kind of, energy stocks look like they may have topped out for now with the move, but So you're getting the whole market moving in unison. During that time, we've seen some interesting things, and it's so hard to keep track of like news stories over the last week. But I think a really significant one, at least I think it's causing at least a short-term bounce in software names, was that Jack Dorsey news from last week.
Layoffs.
And you and I have talked about this a bunch over the last, couple of months. If you start playing around with this Claude Code stuff and all this stuff that's come out in the last couple of months, you're like, oh boy, this is a massive, massive game changer. And so software stocks were getting hammered on that story. Everybody's sitting around. Everybody on Wall Street sitting around playing with this stuff, building apps, building agents, building all that kind of stuff. And they're turning around. The financials started getting hit after the software stocks because everybody's like, well, you don't need all this stuff at, all these places, right? You can just do it internally. You can do it on your own at home. So software is getting hammered. One of the reasons financials started to kind of roll over was the same thing. That layoff announcement and the reaction in the stock by the stock, watching XYZ spike higher. Let's just pull up the chart.
Yeah.
To me was a bit of a turning point. And I think that's why you're seeing software names and all bounce a little bit. So this move, pretty big one. That's a 3-month chart. Look how hammered that had gotten with all of these other, similar stocks. And you see that kind of move. So let's go to IGV, which is 86 today. Oh my God. So I owned this last week and then I had options expiring. I didn't put them on again. So, this is a 1-year chart. This has been a brutal, brutal move, but we got down to this level, right? And right around here, 5 days ago or whatever, I think it was right around here, maybe, was that XYZ news, right?
Yeah.
And even despite all of this volatility and everything, this thing is, kind of starting to make a move higher, a pretty significant one, at least. It may be a dead cat bounce, I don't know. But what I would say, what's interesting here, going into Broadcom earnings, is if semis can manage to move higher and Broadcom doesn't pull an NVIDIA on earnings, right? But look at NVIDIA, it's like right back, right? If Broadcom gets the semis moving higher and this IGV bounce continues, that's that kind of convergence you're looking for in that card we put up last week.
Okay, yeah.
Right? So if you're starting to see multi-sector moves, especially in tech, all move in unison, that's exactly the type of thing coming out of an earnings season that you want to see for the market's next move. You sprinkle in a little bit of volatility, which is always helpful. So if you're a bull and you were looking for finally that breakout above 7,000, you obviously need the Iran stuff to get better. But if Broadcom were to rally and the IGV rally continued, that kind of sprinkle of volatility that you get right here, where everybody, pukes at the lows yesterday morning, and then they try to catch up and buy up, through the highs, that's the kind of thing you're looking for. And again, it's like what we've been talking. It's going to be very obvious because you're going to finally clear 7,000 and then it's going to keep going, right? It'll be very obvious when it happens. So that's the sort of bullish scenario of how we do that, is like all this stuff starts to move in unison together. Maybe, if the Iran stuff is resolved, maybe energy stocks pull back, but that's fine. Like the market can handle energy stocks coming back in a little bit.
Yeah.
Right. So that's sort of the upside scenario. The downside scenarios are pretty obvious. It's like, if AVGO craps out and it takes everything with it, if the IGV bounce is a dead cat bounce, if the Iran situation gets worse, we're going through those lows, and we all kind of know where it's going if that happens, and that's down towards those moving averages, which are in like the 6,500s in SPX now. And you and I have talked a bunch about there's some heavy options positioning just below 6,500. So we would be heading in a straight line for these November lows, basically.
I want to backtrack here real quick, CC, because we didn't get to talk about it last week, and I just want to get your thoughts real quick on the, attributing the relief in software to the block thing. I mean, do you
Yes.
think it's just putting
Oh,
in the AI efficiencies, the efficiencies that AI can get us to in the business world in general? I mean, do you think that just kind of put it in the face of Wall Street and software? Like, hey, look at what can happen here. They can save all this money.
yeah. So yes, I should have gone deeper on this theory. So it's just a theory of mine. I haven't seen a ton of talk about it, but like clearly other people think the same. And the thinking is you've had this move, which has basically been everyone can build your software now themselves. What are you going to do about it? Right. And even if they don't want to, because like, let's say you're running Salesforce and you're running, I don't know, CrowdStrike and you're running
Yeah.
like all these big names, right? And you're paying each of them like hundreds of thousands of dollars a month or millions of dollars a month. Do you really want to leave those things that you've been using for 7 years? Probably not. But man, what a great negotiating tactic at the very least. So
That's
you're
true.
going into the Salesforce reps and like all those places and you're saying, dude, we're paying you 250 grand a month. And we can kind of build a bunch of this stuff internally now in days or weeks.
Can
And
you
what are you
can
going to do
you
about it? And it's
can you
like,
knock 50
can you
grand
knock it
off?
off? Okay. So
Yeah.
that
Yeah.
explains that downward move. I don't think anybody's thinking that all these companies are done. They're just basically saying your margin's about to get massively squeezed, right?
Yeah. Yeah.
Because you're going to get a lot of calls coming up because the boss is looking over somebody's shoulder and being like, dude, you just built that, right?
Right.
So now, what the reason I think that block layoffs, and this is another thing that sucks about Wall Street. Wall Street likes nothing more than like cutting workforces, right? And so all of a sudden you've got this move lower in all these software stocks. It's like, what are you going to do about it? Well, one, you've got to like have a plan of how you're going to navigate this new world. But the second one is just like, you don't, like just lay off your costs, right? And then you come back to some sort of equilibrium of how much it's costing you to do your business versus your margins getting squeezed by
Yeah.
your clients. So
Mhm.
that I don't think I'm the only one that thinks that right now because of that move that we're looking at right now.
Right.
Whether this is a dead count bounce or not or something, I don't know. But I think for the last week, that's what people have been thinking.
Good stuff.
Yeah.
I like how you're thinking about it. Did we look at the I forget, did we look at the expected move card? I don't think we looked at it, right?
No, but we talked to it enough, and it's basically
Okay.
throw it up real quick.
Throw it up. Yeah.
It's sort of hammering home that the VIX is probably too low right now because look at those like USO and gold moves, and even that TLT is a little bit up. We'll get to the jobs number aspect of that on
Yeah.
Friday. That IWM move is pretty massive. There's a
Sure.
divergence happening there where small caps are like starting to be priced to whip around a little bit more. I actually don't. That might have to do with we're finally seeing a little bit of volatility in treasuries and all, and it's like IWM is pretty heavily tied to treasury moves. So
Sure.
plus IWM is a wild one because you also have the regional banks and everything. So anyway, real quickly on that, it's like the SPX and SPY vol, it's still elevated, but it's probably if I see a USO expected move of 10%, I'm expecting to see a much bigger SPX expected move than less than 2%.
Yeah.
And that got as high in the last 2 days. That SPX expected move was over 3% for a week.
Oh.
Right.
Okay.
And the
Wow.
1 day expected move was, almost 1.5. Right.
Mhm.
So that's how much it's contracted since yesterday morning.
Okay, so let's get to a topic here. We have Ab in the chat who's asking about hedging. And they asked, would you be buying calls in the VIX? Would buying calls in the VIX be a good hedge? And I feel like you don't like to hedge with the VIX. Is that
No, I think the VIX is a great hedge, actually.
okay? Okay.
But it's complicated, and I just want everyone to
Hmm.
kind of know how much more complicated it is than
Sure.
a normal ETF or something.
So a little warning here. You think it's effective, but just maybe takes a little bit more effort, maybe a little more
So you need to
hand-holding.
know that each expiration in a VIX is the futures for that expiration. So each expiration is being priced off of a different underlying. Does that make sense, Brent? So no,
Say it
I'll
one more
explain.
time. Say it.
No,
Say
I'll
it.
explain.
Okay.
So if you have like an ETF like SPY, right? So each this week's expiration and next month's expiration and 5 expirations out are all trading off the same thing. They're all trading off SPY.
Yeah.
They're trying to price the movement in SPY between now and then. The VIX options are actually going off of each future all the way out,
Okay.
which are all different prices, right?
Gotcha.
So
Makes
the
sense.
front month VIX is let me see, VIX. I'm going to look up the futures real quick. Riveting TV as this comes up. So I don't even have it. So basically you might be doing options you should be looking at the future of that expiration you're looking at, in other words. So you might see contango, and what's the opposite of contango?
Contango.
So you might see the curve going down and you might see the curve going up. So when you're buying options out like 3 months or whatever, you might have you might be trading off an 18 VIX future or a 28 VIX future, and therefore you should know that. So but I do like the idea, like a VIX is 20 right now. That means all the VIX futures curve out for the next couple of months is also low, and it might be a good opportunity to go out a month or something and buy like a call spread, like a 25-35 call spread or something like that, right? Or something like that. So I don't hate it.
JJ says backwardation. Is that opposite than
exactly
contango? Nice.
We send you a t-shirt.
Okay. I was gonna ask you to maybe take a look at Broadcom specifically, but I mean it's after the close, it's kind of soon, but we do have Marvell tomorrow. I don't know if giving you an extra day or so would maybe
real
allow.
Quick on Broadcom.
Okay, sweet.
It's about just under a 7% expected move. Call it 7%, right? So to the upside, call that about 345. It's like the range here, just very recent, like over the last month. It's those highs right here, basically. And it's these lows from February 4th. I don't know what that was. That's its most recent low. I don't know what happened on February 4th. I can't remember. My brain is scrambled from all the news. So what I would say is you back out this chart a little bit. This is a 1-year chart. And I would say that if you wanted to play for a bounce here, which isn't crazy to me, right? We're back down to this, this gap. If you wanted to play for a bounce from here, the expected move is only taking you up to, sort of 345-ish or whatever. I think you could kind of position a little bit for a continued breakout over the next couple of months if you're bullish. But I would go out to April. And so I would say in April, you might be able to position for a kind of like a 345, 350 to 370, like type call spread or something like that. And the idea there would be you would get your earnings move, and then let's just do it. You would get your earnings move, and then you might get this like a little bit of follow through. Now, obviously, that's completely dependent on the overall market. But if you wanted to do like a 350, 370, it's like you pay 5 to make like 15 or something like that. But if you look on like a 1-year chart, that's not bonkers, right?
Yeah.
Now it would have to react in a different way than Nvidia did. You can't have them like knock it out of the park and then find sellers, and then you're kind of screwed on a trade like this. To the downside, I mean, it's like, I don't know, 300, might be a level to be a buyer.
Yeah.
So all right. So Marvell.
You know what the hold on. You know what the February 4th was? That was the Google earnings date, and that was when they gave the 200 billion capex thing or whatever.
Got you. There you
We
go.
did, yeah, there we go. We did get a couple
Crazy.
questions in. That was,
Yeah.
I was kind of asking about Marvell, but like, you know, I'm whatever. I don't need to be helped out. So video was asking a question on IGV, and then Super Gals was asking, maybe you can just answer this one real quick. Do you use UVXY or UVIX if you don't trade futures? Are there better times in a month to trade these?
Let's just pull these up because I do not trade these. And there's one reason. So UVXY is Ultra VIX short-term futures. So this is long, right? So this is basically like, so if you were going in to buy this today, right? It's down 7.5%. It's actually less than the VIX is down. You need your move over the next couple of days, which you could get. But if you zoom in on something like this, where is your move to? I mean, just look at this. This is just brutal. So you really need your move to be very fast, and you need to get out of something like that. So they always tell you in the small print of these things that this is meant to be short, very short term type positioning. The problem with these things, and the problem why I think some of them are pretty evil, is people get stuck in positions, right? So they do it, they don't get their move, this thing's drifting lower, this thing's drifting lower, they start to double down or whatever, and then you get involved in a chart that looks like that, right?
Right.
So be very careful if you do these things, and I think we've talked about it on the show really quick, but the problem with these things and the reason they bleed, and a lot of these things bleed, is exactly what we were just talking about with the VIX options, is they are rolling against 1 month to the next month to keep that 30-day window. I assume this is a 30-day window rolling out into the future. And so if they are selling low and buying high, or vice versa, depending on which ways these things position, they're bleeding a little bit every day on that roll, right?
Yeah.
So they're not buying the VIX at 20 and then, or selling the VIX at 20 and then buying it 30 days from now at 20. They tend to be like selling it at 19, buying it at 21. And that just costs it every day. It's basically like decay in an option.
Gotcha.
Yeah. So think about this like an option, like you're buying a call and you don't want to sit on that call forever if you're not getting your move.
Okay, the other question here was from video on IGV. I own IGV 85 call monthly expiring March 20th. What are what'd you say?
Nice work.
What are your considerations for rolling to a higher strike or selling the call to turn into a credit spread? Video said they paid $1.80 for the $85 call.
And what was the expiration?
March 20th.
Okay, let's look at it. 85, 86. And they paid what?
$1.80.
Okay. So the first thing I'm looking at here is you are $1.13 in the money, right? So it's the 85 call, you paid $1.80 and you're $1.30 in the money. Yet, of course, this thing is trading $3. However, if you were to not get a further follow-through move here, you needed to get above 86.80 just to not lose money on this trade, right? So you're already up $1.20, but you are at risk of losing 50 cents right now, or 60 cents. All right. So knowing that, what is your next move? I don't love rolling higher because you're sort of like, you're never really going to be taking profits most likely in a scenario like that.
Right.
So there's a couple of things that I do when I get a move, like on a call or a call spread or something like that. One would be just to like kind of, figure out to take profits. You've got, what do you got? 15 days in this. So one would be, let's look at selling a call, because one would just be like to turn it. He said in the question, like turn it into a credit spread. I assume he or she meant just turn it into a call spread, is my guess. But what I would be looking at, let's just look at the calls here. Here, let me go to the chain. March 20th. So 180. All right, I already see what I would do in this thing. If you're still looking for continued follow through, there are a couple of calls you can sell to the upside. So for instance, the 87.50 call, right, which is another $1.50 higher than here, is trading 210-ish, right? So you would be locking in 30 cents of profit that you can't lose. You've locked it in, right? Because you bought it for 180, you're selling something higher for 280. So, but you can make up to not 280, you're selling it for 210. But what you can do is you now have a call spread, an 85, 87.5 call spread, that not only can you make the whole 2.5, you're going to have an extra 30 cents on top of that. So it's a potential to have a risk-free win of $2.80 on the thing.
Heck
but
yeah.
You're risking the $1.20 that you're up right now, right? So you're locking in 30 cents of that $1.20 and you're giving yourself more upside. So that's what I would do in a situation like this. Or if you're like, I don't want to lose the 120, just sell it. You know what I mean?
Yeah.
But yeah, I would be looking at like selling an 87.5. There's other like kind of cheekier things that you could do where you turn it into kind of like a calendar, vertical calendar, where you could be selling something a little tighter. So like you could sell the 87.5 expiring next week. Let me just see what it is tomorrow. 87.5. I mean, it's kind of tempting. So the 87.5 expiring tomorrow is trading about 40 cents. You can sell that today, or expiring Friday. I mean, you can sell that at 40 cents right now. And then that thing, if we're right where we are, or even like a little bit higher, that 40 cents is going to go to zero by Friday afternoon. And if it doesn't, you make money and you just kind of close the thing on Friday. And then let's say it goes to zero and you make 40 cents on that against your, the call you're long, then do it again next week, right? And go out and sell the March 13th 87.5 for, like, right now it's $1.40. And so you could literally start to collect even before you get to your call's expiration. You can continue to collect premium that hopefully goes to zero. And then you basically have that free call on your expiration and do it again, right? So just keep selling. You're in the driver's seat, so sell premium against your win.
Good stuff.
That was good.
Yeah, that one. I feel like
That's a good question.
I feel like you were kind of impressed with that
because I
one.
feel like a lot of people, they don't know exactly how to manage, like, well, first of all, losers in options, which is just get out, right? We've talked about that before. If you don't see this expected move, giving yourself even a shot at like making back all your money, just kind of close it and live to fight another day.
Yep.
Because your strikes tend to be getting too far away from, like, unless you get a miracle, and you never get a miracle.
Yeah.
But the ones where you're actually up money are really fun because you're like, you have a couple of things you can do here. And I actually kind of love that little calendar one where you're like, you sell this week's, tomorrow up $1.50. If the market rips higher, fine. It's like, great. I made all my money and then I'm good. If it doesn't and it goes sideways or it pulls back a little bit, you're like, I collect that 40 cents. Then I do it again next week.
Right.
And then the week after. I like that.
Cool. Video like that one, calendar spread. So cool. Yeah, a couple good questions there to end the show here. Options Unchained on a Wednesday.
Nice.
All right, CC, you cool with wrapping it?
Let's do it.
All right, cool, folks. Thanks for tuning in today on Options Unchained. CC, we'll be back on Friday in the STN room.
You got it.
All right, I'm going to be out on Friday and Monday, so you're going to be hanging with Joel. Joel's back tomorrow.
Awesome.
Cool. All right, have a good rest of your week, CC.
Yep.
Thanks, Pre-Market Prep.